What's up, guys? Rico here. Welcome back to Chibind Brothers. Yes, it has been a very long time, but everybody deserves a break. All right, today I'm going to be talking about something really important that happened this morning about the CPI report. Yes, I know a lot of people out there are really happy with the numbers that we're seeing. Well, there has to be some concerns in there. I understand the market is doing pretty good right now and everybody's kind of happy about what's happening. But again, there's some things here that I want to talk about almost nobody else is talking about. Well, or at least maybe they are, but not as much as pointing out to the positive side, but instead of looking at the full picture. I'm not saying I'm going to be completely like opposite. No, I just want to show you something that nobody's talking about. And let's just dive right into it because we always try to talk about what no one else is talking about. All right, so here's one thing. I understand that last time when we had the inflation report, including food and prices, of course, we were all the way up to 9.1%, right? And then this time it's 8.5%. It's still high, it's still really high. But I do understand that you have to exclude food prices and energy prices because those two are super volatile, meaning they could go as high just as fast or they could come down just as fast, which is pretty much what happened. We saw energy prices like gas went up really fast. We were all crying about how much gas was costing. And now, well, with people are starting to normalize the fact that gas is below $5 on average across the US, somewhere in the $4, but it's still really high because I used to buy gas for 2 point some dollars, okay? So it's still high. But okay, anyway, that was my little rant right there. But anyway, if you look at that, and we understand that when you have these kind of prices, or at least this kind of inflation, kind of flip-flopping back and forth, these numbers, which is why we look mostly at the core, because the core is literally everything else, excluding food and energy prices, meaning good and services. So it could be your clothing prices, your, I don't know, nail salon, therapist, massage, cost, whatever you always pay. It could be anything else that you purchase out there, or your vacuum, or whatever it could be that is not food or gas. And those things are the ones that we're looking into, those goods and services, to see if really what the Fed, what they have done in terms of increasing interest rate, if it actually has been effective. I don't want you to look at the market, what it's doing today, but I want you to look at something very important. So I'm going to show you something right here. Oh, if this page is going to open. So watch this, right? The forecast was 6.1%. We were forecasting that it was going to go up. That was the expectation. Because the previous, which was last time when the whole inflation, including food and energy, was 9.1%, but the core itself was 5.9%. But now, today, for last month, or at least July, it is still 5.9%. So it has not changed. Basically, zero increase. It's good, yes, but you also need to look at the fact that, okay, we had a 75% basis point increase. And then another 75% 75 basis point by the Fed. It is very much possible. Next time we're going to have, I'm not going to say what it's going to be, but I just want you to think about these two things, that even though the Fed have been trying to increase interest rate and they've been aggressive 2 times, the core did not change. This means a sign of a slowdown? I wouldn't say not yet. Okay? Not yet, because nothing changed from what we've seen. And so if you're seeing an 8.5%, like including food and energy, and you think, oh, it went from 9.1 and dropped down, well, it's because gas went down. Food is still kind of high, like little, not kind of, still really high. But Because of the volatility between food and energy, that's why you're seeing those numbers fluctuate. But the actual core itself, well, it's still high and it didn't change. So, with that being said, what do you think the Fed are gonna do next? Could it be another 75? Or could it be another 50? In my opinion, if you ask me, if they do a 50 next time, that means we're getting way ahead of ourselves to be way too confident. So, in my expectation, I would expect another aggressive move. But again, I'm not the Fed. This is just my personal opinion. All right, that's what I wanted to show you. So, when you go back to what the stock itself is doing, if you look right here, I have a pretty nice roof. And you can see how the stock market has been reacting to this. Obviously, when there is news like this, and it seems to be on the positive side, even though it doesn't really tell you much of anything, it just says, oh, it wasn't as bad as I thought it would be, but it's still bad because it did not go there. Remember, in April, we thought we were good, and then all of a sudden, inflation jumped again. So just exercise caution because things like this tend to change from time to time. All right, so let's look now at what the data in the market is telling us. If you look at my really, really nice roof that I've drawn for you here, hope you appreciate that. Leave us the thumbs up. If you look, this chart is all the way back to pretty much April of 2021, all the way up to now. Now, this is very critical. This is the zone that we used to trade in. I need you to look at this other half of the triangle. We are entering, if you look right here, because this is today's candle. This is the daily chart, by the way. If you look right here, this candle we have printed here today, it is the candle that's literally very bullish, by the way, if the market closes like this, trying to get back into the ascending triangle. It's trying to, right? We're still outside of it because why? We have been trying to recover ever since we reached, we could call it a bottom for now. We've been trying to recover. And so when you look at this, meaning that if things continue to get better slowly as it is, because we still know that inflation, not inflation, but recession, it's kind of out there, but we don't really know where to put it because the definition of it changes all the time, even though we've had 2 negative GDP quarters. Still, I don't make the definitions for recessions. They get changed from time to time, depending on what really is your agenda. But anyway, just saying. But if we look at the technicals here, if we print another candle right inside this other half of the ascending triangle, we can confirm that we are back in this zone. Now, we will have very little to see exactly where we're going to go. Are we going to be resistant? Because this is a very strong resistance level. You can see from way back over here, right? It's a very strong level that we've seen in a very long time. Over here, and, it's pretty much everywhere, here, that used to be a support, but first resistance, and support, and then you can see it, support, resistance, and again, right now, it's still a resistance because we have not broken through it just yet. But if we do, we have very little left because we are literally into the ascending triangle. We will be into the ascending triangle. And usually this is a sign of a bullish pattern. We will see once we get into it how the candles are going to be behaving. Because if they keep behaving as they have been doing in the last 2 weeks, once we break out of it, if you remember the videos that I posted way back telling you when I think, or my personal opinion on when I was thinking the market would be able to go back to what it used to be, or at least the highest level, to say recover to what it used to be. right? But there is so many things that are happening. Obviously, we can't control politics or geopolitics. We can't control energy, again, with everything that's happening around the world, whatever, and everything we've been seeing, monkeypox and now polio, and I don't even know what to say. Everything is just being thrown out there since 2020, and I guess it's just gonna be like this every single year. Just get used to it, all right? Just get used to it. This is new, right? It's all right. We'll get through it. It's gonna be okay. But things are gonna be like that. You need to change your mind. You need to adapt to what's going to happen and what could potentially always happen. Don't be surprised. Anyway, I just wanted to mention this because I know a lot of people are talking about how great this is, and a lot of people are thinking, oh, inflation is going down. No, it hasn't. It did not go down. That's literally what I want to tell you. It didn't. Inflation did not go down. It just stayed right there. Where it was, where we saw it last time, that's where it is. Again, if you're seeing 8.5 compared to 9.1, the only difference is oil, or should I say energy prices, and food, which always go back and down all the time. It's pretty volatile. So that's why we exclude that one out of the whole thing, because core is the most important one. So don't let anybody lie to you. All right? Thank you guys for watching this video. As always, for me, I'm happy to be back, and I hope we can have some pretty good content for you guys moving forward. Please don't forget to leave us a thumbs up, subscribe. I'll see you next time. Thank you guys. Bye-bye.